traders from across the globe, and welcome to the 1074th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Traders, remember right off the bat, these videos are mostly geared for short-term trading. I've had a few emails the last few days. Let me explain. I tell you, it is Wednesday night for trading on Thursday, September 12th, 2013. I usually say these videos are geared for today into tomorrow. If it's Wednesday into Thursday, that's what the video's for. By the end of Thursday, this video is moot. Because a few of you have written to me and said, Oscar, you know, a few weeks ago you said gold was going down and now it's going up, and how dare you, and are you insane, and you don't know it? And I'm going, guys, listen. We're day traders. It's a one-day video. Why are you crucifying me 3 weeks later on a good call that day? So I thought I'd explain. I get it. You know, it can be somewhat confusing, so here it is. Again, if I tell you it's Wednesday night like now, and this video is being filmed on Wednesday night for trading Thursday, September 12th, 2013, the video is basically good for tonight through tomorrow. If the video is still good going forward, I will release it again and say to you this video is still valid through tomorrow's date. So it's only good for the next day. Now that whole long-winded explanation goes out the window tonight, of all nights, because on the board, I'm going to show you some monthly charts, so there will be some long-term projections in tonight's video. But on almost every single other occasion, this is geared for tonight into tomorrow, and then new video comes out. Or meet me at livewithoscar.com, where I can explain to you what's the next hot topic. All right, futures trading can be extremely risky and cause substantial financial loss. Futures trading is not suitable for all trading accounts. In this video tonight, we will learn about some things. Some things will be longer term, as I said in this video, and the rest of it is for trading on Thursday, this day, September 12th. So, the short of it is this. Traders, the cycle of fifths. Does anybody remember? A round of applause for the cycle of fifths, traders, because let me tell you something. The market was going down for 5 weeks. Everybody was starting to call the big top. Here it is. Here it comes. And I got in front of you in a video and said, wait a minute. I've got something I like to call the cycle of fifths in the transportation average, and it tells us we're going up. I gave you a buy recommendation, and it has gone up. Now, admittingly, I took my eye off the ball for 1 day since that video and actually took a short where we got stopped out. But every long we have attempted since this video, when I gave you the cycle of fifths and said it would take the markets higher, Omni has had a good trade on the long calls, every one of them since that video, except for the one short. So imagine that. Even when Omni gave us a short, the cycle of fifths was so strong, the short got stopped right out. That wasn't yesterday, that was last week. But, actually that was Monday maybe. But here we are. The cycle of fifths will be revisited in this video. The monthly charts are quite bullish in Europe and the United States. Traders, wait until I show them to you. I kid you not, you're going to like these monthly charts. Now, there's been a lot of question about what the Fed will do. Will they taper? Will they not taper? What should happen? Oh no, the news came out yesterday and it was this much off of what the street thought. They're not going to taper. Oh no, better news came out. They are going to taper. Here's what I think. Now, about 6 to 8 months ago, I got in front of this camera and said to you, around September, the charts tell me the Fed's going to taper. I know I was crazy then, right? What month? What month do you think they're going to taper? That's September, isn't it? I'm not all that far off, am I? So here we are, we're in September, and here's how I think the Fed will taper. Right now, they say they're buying $85 billion worth of bonds per month to help support the market. Now, they say they're buying them. Are they really buying those bonds? Well, I don't know. Who can count? Could you imagine if there was a set of books that you could just look at and go, oh, here's the set of books in the United States. Oh, I see. Ben bought another $85 billion in bonds this month. It's not, I mean, who knows what these books look like, right? But they say they buy $85 billion worth of bonds every month. So we certainly believe that, and the market goes up because Ben is out there buying those bonds, whether he buys them or not. The rhetoric does a good job. I say the rhetoric shifts. Drop the 85. What they're going to say is, listen, we're not abandoning ship. We're not jumping out very quickly. We're going to drop it down to $50 billion a month in bond purchases. That's what I think the Fed will do. And that, will take the stock market up, and likely the bond market will get a little bit of a jolt out of that. And then they'll realize the Fed just said that to keep things calm, because this is going to turn into zero very quickly, and the bonds will get hammered. But that's longer term view. Shorter term view is they drop the 85 billion and they go to 50 billion. 85, no more. I say they tell us they're going to buy 50 billion a month. Will they really buy it? I don't think they've ever actually bought any of the $85 billion a month stuff, but it doesn't matter. They told us they have. It's beautiful news. Thank you, Ben. We believe every word you say. We're going to take the bond trade and we're going to go, right? So we believe they buy the bonds. Who knows? Who cares? Doesn't matter. The bull market in the EU and the ES is not going to stop. The US and the EU, it's not going to stop, traders. The monthly charts will show you we may have pullbacks. This is going for quite some time. It is going up through the fiscal cliff. It's going up through this year. It's going up next year. You've got a bull market on your hands. It is not going to stop anytime soon. Then you've got the bear market in China and the BRIC nations themselves. Now, traders, another thing, I stood in front of this camera months ago and said to you, I think it's time for the UK and Europe to come back online. They're now going to start to move up with our recovery. And who's going to feel it? I did a whole dissertation about this. I said China is going to feel it, and so are the other evolving nations, if you will, or emerging economies. So the BRIC, I think, is going to really have some trouble. China is absolutely going to get punched in the face by the recovery in the US and the UK, and that's probably really good for us, and here's why. If you remember how it was, and everything works in a two-way street, it appears, when the UK and the US were going in this direction during 2008 and 9 and some of 10, you had BRIC in China going like this, like gangbusters. Does everybody remember that? You must remember. It was the best heyday Brazil's ever seen. It was the best heyday in India. It was the best heyday in China. Suddenly, the tables are turning. Now you've got the UK and all of Europe plus the US moving in this direction, and you've got BRIC moving in that direction. It's the exact opposite that we've seen. There is no magic here. What should happen next is these guys get clobbered while we go back up. So fundamentally, it all comes out in the charts, because how could I have got in front of you in the beginning of this year and said by September they're going to have to raise rates because look at what I'm seeing in the charts? I also said China is going to start to go down because I see Europe starting to go up, and that happened as well. So traders, this stuff all comes out of the charts. I do not read the newspapers and surmise what I think. I read charts and I come out and tell you what I see in the charts. Traders, with that in mind, if you like this video, come to my YouTube spot and subscribe. Just click the subscribe button and then you will get a video. Well, you'll get an email every time I put out a video. If you'd like to get much closer to me, I have a live chat room. It is a trading room. It is free. It is at livewithoscar.com. If you come into that chat room, you will see me there. I'm on camera and microphone. I'm quite friendly. I'm quite welcoming. So is my group. And we will absolutely help you become better analysts. So come on down to livewithoscar.com. And traders, here's what I got to say now. With no further ado, let's go look at some charts. Okay, traders, here we are. The Dow Jones Transportation Average, the cycle of fifths. Do you remember this? I put it before your eyes when this weekly bar did not exist. I said, look, traders, it's the Dow Jones Transportation Average weekly bar chart, and I found the cycle I want to bring to your attention. And I said, look, I found something really interesting, and here's what I found. When the transportation average goes up and puts in a high, after the initial high is set, you get 5 weeks. 1, 2, 3, 4, 5, and then it rallies out. Boom, this one rallies out. And then I looked again and said, after the initial high gets made, 1, 2, 3, 4, 5. Well, here, and then it rallies out. And I went, wow, that's 2 of them in a row. So then I looked here and I went, well, here's the initial high. Let's count. And it was 1, 2, 3, 4, 5. And I said, this week she rallies out. And this is exactly what has happened. So we've gotten one of these, just like we got one of these. We got one right here. Bravo for cycles, traders. Are you kidding me? That was easy as pie. Now, we caught every day of this except for one. One day we were stopped, and every other day so far we've been able to catch this based on that cycle. So bravo to analysis. Now, traders, there's more. Watch this. The monthly transportation average is all the way up here. That whole cycle of fifths thing I showed you, that all played out right in there. That whole thing played out in that spot. This is a monthly chart. We've never, ever been this high before. Ever been this high before. This goes, well, you're looking at from 1992, but we know it's never been higher than that back there. This is the highest the transportation average, the leader of US indices, has ever been, and it does not look weak right there. It's building a bull flag. So the monthly chart looks fantastic on the Dow Jones transportation average. You saw that weekly with the cycle of fifths. Then we break it down to the daily. This is the daily chart. Look from back here, November it held, rallied, it held, and it held. It makes this little V bottom whenever it hits this red line, and it takes off for new highs. Right? New highs, new highs. This is going for new highs. Let me blow this chart up even more. Let me show you another version of the very same transportation average chart. This is a blown up version. We are in striking distance of taking out the previous highs, and that is where this bad boy is going. Everything else is doing it. On the monthly, it's already done. On the weekly, we're there. Why not take it out on the daily? So that's your transportation average, right? Now we're going to flip over to DAX. This, if you ask me, the DAX represents all of Europe, and it really does. I don't think the FTSE represents Europe. I think the DAX is the representation of Europe, so I use it. Now I've gotten some emails and some posts in my chat room today, and they were like, Oscar, listen, aren't you afraid of the double top on the daily coming in the DAX? And I said, not a chance, traders. Do you know why? There's no way that's going to be a double top, and let me show you why. Something I've been looking at for quite some time now. This is a monthly chart. Once again, going out to the monthlies, long-term view. This is a monthly chart of the DAX. Back in March of 2000, we hit a high. Came down all the way until 2007, where we got back up there and hit that same high. After that, we had our crash and came down. Now, here's where it gets interesting. We got back to that high. But since then, 1, 2, 3, 4. For 5 months now, we've been above this high. For 5 months, the DAX has been above this high. That signal tells you the DAX wants to go up for several years, most likely, all in total. Now, nothing goes straight up, right? But for several years, I think you get this over this. So that's what the DAX monthly is pointing to, and that is absolutely what the transportation average here in the United States monthly is pointing to. So no double top on that daily. You blow right through it in the DAX, most likely. Then let's move it down to trading for Thursday. This is up close and front page. We're in the foxholes now, traders, so this is it. Let's get ready for trading on Thursday. Here's your NASDAQ. Showed you this chart about 5 days ago and said, we have an upright head and shoulders, but it's a very small one, and my theory is, and I've said this in many, many videos, a very small upright head and shoulders is a continuation pattern in a bull market. A very big head and shoulders is a different story, but a little one is a continuation pattern. And I gave you a target, and this was it. None of these bars existed. I showed you that target. We rallied up, hit that target, went a little above it, came back down, tested the target's support, and then went back up to here, and here's where we are now. That, my friends, is a very bullish look for trading on Thursday. Daily bar chart up close and personal. Then you've got the S&P E-mini. The E-mini S&P just broke out of this channel. This is the very same channel I've been showing you for quite some time. This is the only day that we got caught on the short side, and it went through, and since then we've been doing just fine. This channel's been bested, and now we go into an F flag, in my opinion, and just continue on in this fashion. Traders, that's what I see. This is the brand of analysis that I teach. You come on down to livewithoscar.com, and I promise I will help you understand these charts the same way I look at them every day of my life. So, traders, you've seen the chart, and there was my extremely long-winded argument for what's going on out there. So we've got the ES going up tomorrow. The cycle of fifths, I believe that worked absolutely, positively, exactly the way it was supposed to. Another round of applause for the cycle of fifths. Monthly charts are absolutely bullish. Nothing goes straight up, but overall, that looks very bullish. And don't forget, my theory is Fed tapering goes from 85 to 50. They don't just stop, little increments. The bull market in the ES, the bull market in the EU and the US will continue, and the bear market will pick up some speed in China and brick, and that's what I'm seeing in the charts. Traders, again, live.oscar.com. Come to my chat room and allow me to help you become a better analyst. I will see you there. Always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll video number 1074, and watch out for more upside to come. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.